Welcome to the Explainer. You know, right now, the market feels like it's being pulled in two totally different directions. It's pretty conflicted. So today, we're going to make sense of it all. Let's dig in.
So think about this. A government shutdown, gold prices hitting record highs, and an AI company suddenly worth $500 billion. I mean, what do these things even have in common? On the surface, absolutely nothing, right? You've got political chaos over here, a classic fear trade over there, and then this huge futuristic tech story. But here's the thing. They're all pieces of the same puzzle, and they show this deep, deep divide in how investors are seeing the world. Today, we're going to connect those dots.
All right, so here's how we're going to tackle this. We'll kick things off with that big political story, the shutdown, and the shadow it's casting. Then, we'll look at how the markets are scrambling for safety. After that, we're going to pivot to the complete opposite story, the AI gold rush that's happening right now. We'll even touch on some other huge industry shifts before we wrap it all up with a playbook on what this all means for you.
All right, let's jump right in. The story that's just everywhere right now. The U.S. government shutdown. I mean, lawmakers just couldn't get a funding deal done, and now that's sending this huge wave of uncertainty across the entire economy.
Okay, so you look at a chart like this, and your first thought might be, government shutdowns are no big deal for the market. And, looking back, you'd have a point. The S&P 500 has often come out just fine, sometimes even positive. But, and this is a big but, a lot of analysts are waving red flags, saying this time just feels different, especially with where the economy and politics are at right now.
And this right here really gets to the heart of why people are so nervous. The Treasury Secretary, Scott Bessent, isn't mincing words. He's warning about a direct hit to GDP, to growth, to working Americans. He's basically saying, hey, this is way more than just some political drama in D.C.
And the fallout is happening right now, immediately. The biggest problem? We're basically flying blind on the economy. All those key data reports we rely on, like the jobs numbers, they're on ice. And that makes the Federal Reserve's job, well, pretty much impossible. How can they make decisions on interest rates without the data? Then you throw in all the political threats on top of that, and bam, you've got a perfect recipe for some serious investor anxiety. So the big question is, where does all that nervous money go?
Well, it's pretty much what you'd expect, right? With all this chaos coming out of Washington, the market's first instinct is a classic flight to safety. Investors are basically just looking for a place to hide out from the storm.
Wow. I mean, this number really tells the whole story, doesn't it? In a classic fear trade move, investors just piled into gold, the oldest safe haven in the book. It didn't just go up, it surged to a record high. And get this, it's the 39th record high this year. That tells you just how deep this anxiety really is. We're talking about a nearly 50% gain year to date. Just incredible.
And if you think that's wild, some analysts are saying this is just the beginning. Listen to this from Philippe Gisels over at BNP Paribas Fortis. He's saying we're only in the second or third inning of a massive bull market for precious metals. He sees $4,000 an ounce not as the peak, but as the new starting point. Wild.
But the search for safety also uncovers where the real stress points are. And this is fascinating. If you look at corporate debt, you see two completely different stories playing out. PIMCO is pointing out that in the public debt markets, where companies get cheaper loans but have tons of lenders, things are getting shaky. It's really hard to renegotiate if you get into trouble. But in the private credit world, it's more flexible, even if it costs more.
Yeah, PIMCO's president Christian Straka basically says it outright. The public markets are where you're starting to see the cracks form. So, okay, this all paints a picture of fear, right? Uncertainty, everyone running for cover, but at the exact same time all this is happening, a completely different and incredibly powerful story is unfolding.
And here is the massive pivot. For all the fear and gloom we just talked about, there is a literal tsunami of investment and growth happening in one specific place: artificial intelligence. It's the total opposite of the shutdown story.
And the poster child for this, of course, is OpenAI. The company just locked in a deal that values it at, wait for it, $500 billion. That's a 5 with 11 zeros. It makes it the most valuable private company on the planet, and the ripple effects from this news were felt instantly, everywhere. And you can literally see that chain reaction playing out here. So OpenAI announces they're teaming up with Samsung and SK Hynix for chips. What happens next? The market goes nuts. Samsung stock pops, and SK Hynix, its stock soars almost 10% to a high they haven't seen in 2 decades.
And this wasn't just about those two companies. Not at all. This rally was so strong, it actually pulled South Korea's entire stock market index, the Kospi, to a brand new all-time high. It even gave a boost to tech stocks all the way over in Europe. The AI boom isn't a niche story. It is a genuine global force. But it's not the only big shift creating winners and losers out there.
Yeah, beyond AI, you've got these huge fundamental shifts happening in other major industries, and it's really starting to separate the pack.
Just look at the auto industry. U.S. car makers had an amazing third quarter. And what was the engine behind it? A huge boom in EV sales. A lot of consumers were rushing to buy before some of the federal incentives ran out. And for companies like Ford and GM, their EV sales didn't just go up, they exploded, which really helped their bottom line.
But here's that theme again, a tale of two markets. While the U.S. automakers were popping champagne, the Chinese EV giant BYD slammed into a wall. They just reported their first sales drop of the year, with deliveries down almost 6%. Why? They're getting hammered by a brutal price war in their home market. It's a really stark contrast in the global EV race.
And these big changes aren't just in things you can touch, like cars. If we look even further down the road, there's another tech revolution brewing, this time in the world of finance itself. It's this idea called tokenization. And the concept is actually pretty simple, but the implications are huge. What if you could turn every real-world asset, stocks, real estate, you name it, into a digital token on a blockchain?
The CEO of Robinhood, Vlad Tenev, has a pretty vivid way of putting it. He calls it an unstoppable freight train that's eventually going to eat the entire financial system. That's a bold statement. The whole idea is to make finance more efficient, more accessible, more transparent. It's a whole new vision for how money moves. So, with all these clashing forces, chaos here, revolution there, what on earth are you supposed to do?
Okay, let's bring this all home. On one hand, you've got political chaos. On the other, a full-blown technological revolution. So how do you navigate that? Let's check out some advice from the pros.
So one interesting idea comes from Jim Cramer, and it's basically to split your portfolio in two to reflect this divided market. The game plan looks something like this. Build your foundation, say half your money, in broad index funds. Set it and forget it. But then, with the other half, you get to be more active. You pick a handful of individual stocks, you make one of them a bit more speculative, and, this is key, you dedicate one of those spots to an insurance policy, like gold or crypto, to protect against exactly the kind of political risk we've been seeing.
So at the end of the day, here's what it all boils down to. You really can't afford to ignore either side of this coin. The political risk is very real. The rush into gold proves that. But at the exact same time, the growth happening in AI, EVs, and fintech is just too massive to write off. It seems like the only way forward is a balanced strategy, one that has a healthy dose of both caution and ambition.
And all this leaves us with what might be the central question for investors right now. In a world where new technology is reshaping everything at lightning speed, while the old systems seem to be grinding to a halt, is playing it too safe actually the biggest risk you can take? Something to think about. Thanks for joining us.